In this episode of Smart Humans, we talk with Zac Townsend about his startup, Meanwhile, which is the first company that's able to wrap life insurance with Bitcoin. Instead of having to be dollar denominated, you're able to use Bitcoin to invest into your life insurance. He talks to us about the future of crypto and the future of fintech innovation.
Welcome to Smart Humans with Slava Rubin, presented by Vincent. In this alt investing podcast, Slava talks to amazing minds about their investment journey and finds out what it takes to make it in the markets. And now, here's your host and smart human, Slava Rubin.
Hello, and welcome to the latest episode of Smart Humans. As always, I'm very excited for today's guest. We have a pioneer in the world of insurance, specifically as it relates to crypto, Zac Townsend, co-founder and CEO of Meanwhile. Welcome.
Thanks. Happy to be here.
Yeah, so we always like to start with the same kind of open-ended question. Given that crypto is an alt and also a new startup is an alt, how did you even get here? How did you get into the world of alts? Where did it all begin? Go far back as you'd like.
Yeah, I think like a lot of folks, you mentioned both tech and crypto, and I think I made a choice to be involved in those things. And then I've actually learned a lot more about alternative investing through over time. So I actually worked in like the government out in the East Coast, got really interested in like financial inclusion, financial empowerment issues. I really was just on Hacker News, Y Combinator's site, and wanted to work in fintech and applied in 2013 to what looked like the best company in the fintech space. So I ended up as like employee 36, 37 at Stripe. And obviously, keeping Stripe stock or having earned Stripe stock would have been the best possible introduction to alternative investing possible. But in what was probably the worst thing I've ever done financially, but maybe like the best life decision, I got into Y Combinator with a startup. And at that time, so this is like 2013, I wasn't even accredited, right? So actually, like people would ask me to do angel investing, and I couldn't. So a friend and I, actually my co-founder in that first company, which was called Standard Treasury, we founded a like really small, like $1 million venture fund, and mostly invested in like YC companies in like 2013, 14. So I'd say that that's really maybe like indicative of the two major paths that led or and also my like general alternative exposure, which is like there's equity in startups I've started. First, this company called Standard Treasury, which was backed by like Index and Andreessen Horowitz and Y Combinator. Eventually sold that business to Silicon Valley Bank in 2015. And now I have the current startup, which we'll eventually talk about. And then on the other hand, really just investing in startups, first through the fund. And then I think I've been really, really lucky. I've made like 6 or 7 angel investments, just not that many. But one of those was Bridge, which just sold to Stripe for something like $1 billion. And another one was this company called Astronis, which builds geostationary satellites and is also a unicorn. So I have a really high hit rate on angel investing, but I don't think that's because of skill. That's just sort of because of well, I'm just gonna say luck. I was pretty lucky. And then more generally, in my first company, what we were doing is we were trying to build a bank that was like an Amazon Web Service of banking. And we really were starting on the payments and bank account side. This became a whole space. We sort of like invented bank account as a service. So Stripe Atlas was built on top of us, which is this service where you can really just start a whole company from scratch, including getting a bank account. And that was built on our infrastructure. And at the time, I was thinking about Standard Treasury starting a bank. I went to the UK and we did a lot around like starting a challenger bank. And there's all sorts of reasons we couldn't do that, mostly because we couldn't raise the money to do that. But that led me on this really long path of thinking about bank balance sheets. And that's actually how I ended up in life insurance. So the problem with banks is you collect deposits, so you like owe people deposits, and then you make these like long-term loans, right? And that doesn't make a lot of sense because deposits can walk out the door, like happened in Silicon Valley Bank when they failed. So life insurers have become this huge buyer of alternatives, particularly private credit, particularly you mentioned, real estate, really the whole world of assets that have long durations. And that's just super interesting to me personally. And I think there's a real premium in life and individual decisions, but also investment decisions when you're willing to deal with illiquidity and to like think in the long term. So life insurance for me is partially really an expression of this interest I have in alternatives, even if I haven't myself, other than angel investing, like been rich enough to like, I don't know, write a $10 million check to KKR's private credit fund or whatever.
All right. Well, very interesting background. You had me at obviously employee 36, 37 at Stripe. So let's just back right up to that, which is um, why did you join Stripe? How did that happen?
Yeah, it really was. So at the time, I was working for Cory Booker, was the mayor of Newark, New Jersey, and I was like head of innovation, CTO of the city of Newark. So I was like using tech and data to like try and improve city services. And I got assigned the financial inclusion, financial empowerment portfolio. So like, why do people in West Newark not have bank accounts? Like, why do they use check cashing? And as a young, like brash technologist, I just found it really confusing because I was like, the marginal cost of a database entries is free. So like bank accounts should be like approximately free. So like, why are there minimums? Like, why doesn't whatever big four banks open bank accounts for low income folks? I know a lot more about that now, but anyway, I was somewhat naive about like how the world worked. I was like, okay, I want to work in financial technology. It like marries these like two things I'm really interested in. Like one hand, I like tech and data and software engineering, and the other, I had like studied finance as an undergrad and like all the power of all that. So when Corey decided to run for Senate, I was like, and he's now a senator. I was like, I don't really care about the Senate. Like, I don't want to work in a Senate office. Like, it's not. You don't really like do things. You like, I don't know, talk about things. Is my opinion of like moving from a mayor to being or a governor to being a senator. So I was young. I thought I wanted to work in fintech. And literally I just applied to like on the website of what seemed to be the coolest fintech. And it was pretty early, but they had a valuation, I think, in like the $500 million. I mean, it was quite
Not nothing.
even in yeah, not like already in 2013, it looked like it was going to be a really interesting company. And I could just see from Hacker News, which is this like forum that Y Combinator runs, like Reddit for Y Combinator, that they were really responsive, that they were like in the comments, like they were part of the community. So I really just went to their website and applied. And I got the job. But what also happened is before I had applied to Stripe, I had a buddy and I had also applied to Y Combinator. So I started at Stripe and then got the interview to to apply to YC. And obviously, although Stripe seemed like it was a rocket ship, I didn't know it was going to be worth, you know, 50 to $100 billion. And I actually think if you're a certain type of person, like ambitious, like person who themselves wants to take over the world, being early at a startup is both good training, but also is like you start looking around saying like, I think I could do this. And that itself was like true in the sense that I could start a startup, but has not yet been true that I could start a company as big as Stripe. But it was hard to know that all in 2013.
But you did end up working at Stripe. Is that right?
Yeah, yeah, for like 3 months.
Okay, for 3 months. Gotcha.
Yeah.
Did you
So I
get
don't want to overstate my either my impact or the financial impact of my life.
did you get to vest any shares?
No, no.
Oh, that's challenging. Like you said,
Yeah.
considering, even the math of if you came in at 500 and it's worth, let's even call it 70 billion today, that's 140, some dilution. That's a solid 100x.
Yeah,
Just
probably.
saying, just saying.
Yeah, actually, I'll tell you the one other story, which is so I ran this company, Standard Treasury. We built a like really kick-ass engineering team, done a lot of cool stuff. And at the end of that, we sort of like failed into what I call like an acqui-hire plus. Like we had built some interesting tech. We couldn't raise an A. We had this crazy idea of starting a bank, as I said. So we got offers to buy the company. And the offer we ended up taking was Silicon Valley Bank. And partially that was because it was like more cash compensation, but also it was because like selling your fintech to a bank was like is relatively high signal. And this was like before JP Morgan bought WePay. It's just like it was very unusual to actually have a bank buy a fintech company, and we thought that would be amazing. The other offer we had on the table was Coinbase, and would have had us be like employees, like I don't know, 40 to 45. They really needed a team that like understood payments ops and like AML ATF. So that's like another $100 million chance that I, you know, just missed.
So you're either super lucky or super unlucky, or it's just called life.
Yeah, I think it's just life.
Amazing. These are great stories. So you go from Stripe to starting Standard Treasury, exiting to SVB, then starting your new company. Is that correct? Is that the trajectory?
Oh, there's some stuff in between. I did another stint in government service. I was the first chief data officer of the California state government, which is the whole interesting rabbit hole.
What year is that?
20 like 17, 2018.
Nice.
And then my son was born, who's now 6, and my wife started a startup. It's like her turn, might be a good way to put it. So it was my turn to like just get a job that like paid the bills. So I worked at McKinsey and was like the COO of the North American fintech practice. And in particular, no one really knows this, but they have this whole practice where they like build companies from scratch. So
Nice.
I would like go to an incumbent and like be the general manager of a new like division. And then I would like train my replacement and then like replace myself. And I did that like one of those projects a year for basically 3 years. The long and the short of that, to like completely summarize those 3 years, is incumbents are really bad at building anything. But if you build something good inside an incumbent, they tend to really be able to sell it.
Fair enough.
So I can like have these big claims like I started 3 businesses that got to like $25 million in GMV incredibly quickly, which really isn't a result of how amazing the thing we built is, although like they were pretty cool things. It's that like if you can hand the enterprise sales force of um incumbent X or incumbent Y a good piece of software, they can like really distribute it.
Amazing.
It sort
Amazing.
of comes back to that. I think it's Alex Rampell has this old quotation that's like, the fundamental battle is between startups innovating and incumbents like adopting innovation
Right.
or
Distribution, right? The scale.
yeah.
So we're going to get into your new startup here in just a minute. But before we go there, I'd love to understand a little bit more your point of view across all. So you already teased us a little bit with your amazing track record on angel investing. 2 out of your 6 or 7 are already unicorns, which is amazing.
Yeah.
Already had the exit. Obviously, there's others that you probably know a lot about, crypto. And then, we look at art and collectibles. We look at real estate and private credit. How much of your net worth would you say you put, besides your actual company, which is an easy answer, which is a ton of your net worth?
Yeah.
How much of your net worth would you say is in alternative investments, not your typically 60/40 public stocks or bonds?
Yeah, it's interesting. You know, I'm probably overweighted in net worth. Like if you took out my company
Yeah, of
and
course.
then you took out like my real estate I live in. And then the other bucket that's hard that I haven't probably optimized is, I have a ton of retirement savings, right? Like you just in the sense that you like should max out your 401k. Anyway, I don't want to give like simple financial advice, particularly when you work at McKinsey, you should like absolutely max out because they have like these huge, amazing matches. So and then it's relatively hard, not impossible, but it's relatively hard to take those accounts and like invest them in alts. Now, I think that's changing. And in fact, it like absolutely should change. What I find like so perplexing is um, that your retirement accounts are actually the place where you should be most comfortable with duration. Right, like I literally can't access my 401k until I'm like whatever it is, 60 or 65. So that should be the place that I like. I wish I could just. I think there are ways to do it, but like just take my Roth IRA and like put it in venture funds.
Yeah, there are. It's just
Or
becoming easier, but it's always been historically very complicated. The whole
yeah, and
self-directed concept.
yeah,
Exactly.
exactly. And I think Apollo and KKR and others are like working on this even harder because
That's where they see the
they're it
money
just sort
come
of
from.
yeah, and it just makes sense, right? So so anyway, so if we take away my equity, my house, and my retirement accounts, right? So then you have like liquid net worth. It's probably pretty high. I don't know. I don't even track it very well, but
But
like
just
probably
directional. Are we talking
Yeah, like
10%?
60 or 70%, right?
Nice.
Partially for the exact reason that I'm saying, which is, um,
You're already stuck with your duration stuff in your retirement, et cetera, et cetera.
yeah, yeah. And just that, like, what's in some ways, I think for me, there's like cash and cash equivalents. And then there's like a whole question about how to optimize that, which I have sometimes been good at, like doing treasury ladders and things like that. But in my current like running a startup mode, it's just like there's cash in a savings account that like yields,
Like,
whatever it does, 4 to 4.25. And then the rest is, yeah, like angel investments. There's this tool I've been playing around with called Composer, which allows you to do like quant, like set up like quant finance type stuff in the public markets. But then there's this, you have a huge tax drag, which sort of, if you're actively trading something. And then, yeah, and then crypto exposure. I've put a lot of my crypto exposure because I mean, we'll talk about my company, but like I'm so long Bitcoin in my company, like so absurdly long Bitcoin that actually my personal crypto portfolio now is a lot of like stablecoin yield stuff, and not even like the craziest stuff, just like trying to get like 10 to 15% yields.
what do you like to put into these days?
The thing that, again, I'm always on the lookout for like spending less time on this stuff.
That's a
um
We like that.
Yeah, so it starts with like I'm there with my wallet, like doing stuff. And then recently, there's this company backed by Paradigm and Han called Exponential. I think they're exponential.fi. And they're almost like you do have to like pick, but they're like a wealth front for DeFi or something. Like they do a lot of the like management, and they like sell the reward tokens. So you're just like getting yield. And if you go to their website and you sign up, then they like have this list where it's like, okay, Aave yields like 11%, and like Curve in USD yields like 14%, and like Fluid yields 14.2. And then you can like allocate dollars across these various strategies, and then they write these really detailed risk reports about like every strategy so you can pick. So that's like one way I've been managing like DeFi yield. Just angel investment, DeFi yield. And
Sorry,
then
sorry. Do you just give them like a chunk of Bitcoin or a chunk of stablecoin, and then they put it across those, or you choose?
you have to pick. You have to
Okay,
pick.
got it. Okay,
Um, and then I would say the last bucket
but they make the
is,
user
again,
experience easier because you don't
yeah,
actually have to
super
be
easy.
you don't have
That's
to
right.
be in those DeFi markets in Aave or
Correct.
etc. You can kind of just use this as a front layer, and they take a fee.
Yeah. Yeah. And actually, they just charge. I'm not. I have no investment in this company. I just like them. Yeah, they charge a 20 basis point like in out fee of the strategies, but they don't charge like an AUM fee.
Awesome.
And yeah, you pick the strategy. And the thing that they do that I really like is sometimes there are like reward tokens, like you're like lending on in some like prime lending marketplace, and then there's this exhaust of like an extra token because you did it. And what you really want to do is like, in my opinion, what you want to do is like sell that token regularly, and they like manage that, right? So they're really just managing it to like a dollar yield. Or they also have like an ETH yield strategies and like Bitcoin yield strategies, so you can like pick amongst these things.
High level, how long do you think you've been doing something like that?
On my own, probably like since the ICO boom.
Like
So
17?
like 3, 4, yeah,
What
like
kind
five,
of
6 years.
what kind of yields have you been getting? Like even as you've been kind of letting others do it
Yeah,
with you?
again, I try to like, I'm probably in the like more conservative range of trying to like get approximately 10% yields.
It's
There
funny
there
that
are
it's
like,
conservative because a lot of people
yeah,
listening to
yeah,
this
but
don't
in
even
DeFi
know,
land, right?
right? They don't
There's
even know
like
crypto.
crazy stuff you can do where like, oh, okay, you're like levering up some basis trade over and over again in some circle, and then like you have a really small margin, but you're getting 40% yields. Like the I don't do those things.
All right. So beyond crypto
Oh,
and
sorry. And then the last thing I'd say is I'm very fortunate as a founder, um, to a lot of the funds that venture funds that have invested in me, they'll often have like founder sidecars. So these are like low fee or low carry sidecars. So you're getting exposure to fund X or fund Y, um, but in an advantage way. That's not, I guess, something that like everyone has access to, but I do have like some of my net worth and that stuff.
Amazing. And then anything for incremental real estate, yield oriented stuff?
No, we thought a lot about it, my wife and I. And the short story is we have like occasionally, like we pandemic moved to Austin and then we moved back. And for a while we were like, okay, well, we had this like beautiful mid-century modern house, like right next to Barton Springs, like we'll like do a rental. And then we're just like, actually, this is a huge pain in the butt.
Too much work.
Um,
Just give
it's
me
just too
DeFi.
much work.
Give me DeFi yield.
Yeah, give me DeFi yield. Um, so like in principle, I'm interested in real estate. And you mentioned art too. Um, like in principle, I think that's a really fascinating asset class, but just a little outside um
Totally fair.
my current wheelhouse. Yeah.
Next topic, really open ended. What do you think of the market? You could take this everything from Trump coming into office to the economy to inflation to crypto to
Yeah.
at production right now. BTC just went under 90,000 and then jumped back up.
Yeah.
So take this wherever you want. What do you think of the market? We just got into 2025. What's happening?
Wow, what a question. I just like dispositionally tend to like you know be a little contrarian. And it's not that I'm like pessimistic, but I would say I'm like probably not as optimistic as everyone else is. But that's also like a fool of error in itself, right? Like in 2014, if you like really pressed me, I probably wouldn't like the market can't go up forever, and then like went up for another 8 years, right? So um, that's sort of what it feels like to me right now. I don't pay a huge amount of attention, but like PE ratios again seem to like really be going off the charts. The whole market's like dominated by the big tech players, and although I'm like incredibly long the power of those platforms, it also like does seem like disproportionate. Um, but then I don't actually do anything differently, So it's like an easy intellectual thing to say. Like I think we're like they're too excited about Trump post-election. Like I have no idea, like I think no one else does, about like are there going to be tariffs? Are there going to be tariffs on everything, on nothing? Like, is that going to be good, bad? Like, there's like these big structural risks when I look out over the year. Um, but do I have conviction around those things? No, in the sense that like it's not like I'm taking my entire retirement portfolio that I mentioned, like putting it in cash to wait. Um, so I think that's one of the things that I realized about myself is um, outside like a few like just funny examples in history, like I made a bunch of money on GME options because I just like YOLO'd,
Game, game, game,
$10,000.
GameStop in the
Yeah,
public
GameStop
market.
options. Yeah. I don't. I tend to think that when I reflect on like what I know and believe, it's that like technology and the disruption that technology companies can bring to markets, like, is meaningful. But I believe that like decade over decade.
Right.
Um,
Long term.
yeah, and so I tend not to do anything in my personal portfolio or my portfolio allocation that makes me that exposes me to like short-term risks. And it's not even, by the way, that I'm not like an efficient markets hypothesis guy. Like I do think there is like people make money. It's just like not what I have optimized like my life around knowing a lot about. Um, but I got real philosophical in your question, so I can avoid it, like anyway, yeah, things seem frothy to me.
So I'll ask you one tactical question then in the area that you know so much about, which is crypto. And you say you're so long BTC. Give me a little perspective without you obviously knowing the future. What does 2025 hold for BTC?
Yeah, so I'm gonna dodge the question by saying we'll get it just in brief. I run a life insurance company denominated in Bitcoin. All right. Well, anyway, we'll talk about what that means. But one of the reasons that I love that company, the idea, and that we started the company is I don't know. Like I don't know what Bitcoin's going to do this week or this month or this year, and I'm not even sure I know what it's going to do like next 5 years. But I do know like this is a like it didn't have to be, but I think it's a global decentralized store of value that's like outside the control of any person or government. And that like may be a social fiction, but it like is a social fiction that like has come to pass. And or like all money. And what I believe that means is that like so many people in the world will continue to like face currency risk and regime risk and inflation risk, and those problems will persist. And thus, like Bitcoin will be more valuable on a like purchasing power basis in 10 years and 20 years and 30 years and 40 years. Um, so you mentioned actually Bitcoin going down to 90,000. Like over the course of running the company, Bitcoin's been at, you know, 65, and then it like went down to 16, and then it like hovered around down there, and then it, like, you know, peaked at 105, and now it's down to 90. Like we own a lot of Bitcoin. um, and I like that's been a good trade for us on some level. But more importantly, like I think the question is, what is Bitcoin going to be worth in like 2030 or 2040 or 2050? And I think it'll be worth more.
So give me a number, 2030 or 2040.
2030. I think it'll be like mid six figures, like two to 300. It's my. I
So
think the curve will slow down a little bit because it can't.
so to, so
It's like when you have a child and they like in the first week and you're like, okay, well, if they keep growing at this rate, they'll soon be larger than the universe. Like you know, sometimes people will mention Bitcoin numbers. They're like, well, if you multiplied that out, it would like be worth more than like all day in America, which like just doesn't intuitively make sense. Um, but I think on some time frame, like having the market cap of gold, which I think is something like 700,000, like that makes reasonable sense to me. Is that going to be 2030? I don't know, but like it, it that it's sort of conceptually when I think about it compared to other assets, like those ranges make sense to me.
okay, market cap of gold. I like that. So meanwhile, your business, the first life
Yeah.
insurer using Bitcoin. Explain that. What does that mean? Why did
Well,
you
let me
start it?
take a step back and basically say that life insurance is this critical financial service, and part of what life insurance and annuities ends up being about. There are these deep like structural reasons that these things exist, right? Like you don't know when you're going to die, or you don't know if you're going to live longer than you're supposed to, and then like how do you share and pool that risk? And because of that, society and governments have decided that like life insurance is good, so that like widows don't starve and like orphans like get paid, have some cash, and because of that, every country in the world that has taxes. Um, Tends to have tax privileges for life insurance and annuities. So our product is entirely denominated in Bitcoin. So we have this company in Bermuda, regulated by the Bermuda Monetary Authority. Bermuda is like a legit place to have a life insurance company. Many of the world's largest life insurance companies are there. Um, and it operates like any other life insurance company. It's just entirely in Bitcoin. So people pay premiums in Bitcoin. We pay out claims in Bitcoin. If Bitcoin's to 700,000 or $7 million a coin, like we're paying out in Bitcoin. And then we do all the mechanics, like the reserving and the capital cost an insurance company does, also in Bitcoin. But what users are getting is one, they're just getting the like people, as I said, like Bitcoin is this global store of value. So if you were concerned about, particularly I think inflation risk, like protecting your children or protecting yourself in some ways with Bitcoin denominated life insurance, like intuitively makes sense. And by the way, we're not, although I think some of the people I assume a lot of people who listen are interested in Bitcoin, but some of them won't be. We tend to not try to convince people like ex ante that they should own Bitcoin. It's more like if you've already decided that you want Bitcoin exposure, then this life insurance policy is a great way to like save intergenerationally, like for your kids. And then you're getting that like literal insurance protection. You get hit by a bus, your kids get more Bitcoin than you put in. The second is our product, let's say you put in 10 Bitcoin, we promise you 15 whenever you die. We churn 10 into 15 basically through private credit. Like we lend Bitcoin to institutional counterparties at like 2 to 3% yields. We pass it on to you, even if you, like Slava or your user, was doing all that work, you would owe interest income tax every year, right? So that compounding inside the policy, having the tax benefit, being tax free is meaningful. The third thing is, like every sort of a whole life insurance policy, people can take loans against the policy, and those loans are tax free. So if Bitcoin does go to $700,000 a coin or 5 million or whatever, you could borrow Bitcoin out of the policy, and it's like new tax basis Bitcoin. And then the fourth thing that people get is, and I think it's cool, is just a lot of people are worried about managing their Bitcoin, like doing keys and like how am I going to make sure my kids are going to get it, even inside the context of like big platforms like Coinbase. And like literally a life insurance company, like one of our duties is to just make sure that we find your beneficiaries and we like get them their Bitcoin. Um,
That was super helpful. So, just going back at you with those benefits. So, it's managing the Bitcoin so you don't have to think about the keys. It's getting those interest free loans. It's being able to get the inflation hedge by having the BTC growing. And what was the fourth?
the tax-free growth.
Got it. So,
You did a better job than me, Slava, of just like, bam,
I'm just listening,
summarizing it.
just listening, just
You're just
listening.
listening. Hmm.
So, um, what do I need to be a customer? Do I need to have a certain amount of wealth? Do I need to have a certain amount of Bitcoin? Do I?
Yeah,
How do I become your customer?
yeah. Um, our basically the way the product works is you pay over 10 years. So let's say you pay 1 Bitcoin a year for 10 years. So you've given us 10 Bitcoin, and then we, as I said, we probably promised you 15. People can prepay. Our minimum policy size is 1 Bitcoin. Um, so that's certainly a limit. And it's not accredited. It's like the Bermuda equivalent. You do have to have like, you should sort of think of it like accredited. Like you have to be able to label you as a sophisticated investor, which your listeners will be. Um, and then it is an insurance policy, right? So you have to be able to KYC, and we underwrite you. So the underwriting isn't invasive. We tend to be able to use like data sources that are available to insurance companies to underwrite you, but you do have to be like relatively healthy. We reject people who aren't healthy, and as in lots of life insurance companies would. So really, that's it. Some baseline net worth, and an ability to pass KYC and underwriting.
Okay, so let's just use me as an example. Since I'm not a customer yet, I believe I'm
Yep.
reasonably healthy. I believe I'm reasonably sophisticated. Hopefully, can pass the bar. Let's just use that 1 Bitcoin minimum, if that's
Yep.
okay. So I would want to put in 1 Bitcoin. That's across 10 years, meaning 1/10 per year, or how does that work?
Correct. Yeah. What you would owe us is a tenth of a Bitcoin a year for 10 years. Lots of people like set it and forget it, and just like send us the Bitcoin. And also, sort of structurally, it's interesting. We have some users, I don't know if you have 1 Bitcoin, who want to dollar cost average into Bitcoin. So they say like, oh, I'll buy this tenth of a Bitcoin every year. And we have other users who like have a Bitcoin or 1,000 Bitcoin and then just like send it all to us at once. Either of those are fine. I sort of structurally say to people like, I'm not recommending you short Bitcoin. Um, the reason that we have what's called the 10 pay, you pay over 10 years, is that's what allows us, under the Internal Revenue Code, like we've structured the product to make sure that you get the most tax benefits possible. So, but to go back to your question, like you go to our website, meanwhile.bm, there's like an application, you fill it out, we underwrite you, we like do KYC checks, we present you with your offer based on your underwriting, you sign up, then you know, file the forms, and then you owe us a tenth of a Bitcoin a year for 10 years. And then you have, uh, we're promising you in mine, example, 1.5 Bitcoin whenever or we're promising your beneficiaries 1.5 Bitcoin whenever you die. And then inside the policy, there's like this savings account, you could think of it. It's like amortizing over time. It's becoming more valuable. And that's what you can take policy loans against over
So,
time.
so I'm 5 years in. I've given you half of a Bitcoin. Um, has that appreciated a little bit because of the work your team is doing?
No, you actually have a little less than what you've put in because we've provided you mortality protection in the sense that like you could have gotten hit by a bus.
Yep.
Um, so uh, I don't know the exact numbers in year five. It also sort of depends on how old you are.
No, that's fine.
But it's actually like it stays less than you've paid in until like year 12 or 13, I
Okay.
think.
So let's say
It
it's
sort
year
of depends on
five
your
though,
age.
and I need to just buy a house or something. Can I access already in year five?
Yes, yes,
Okay.
yes.
And if I take
There's a
out
2-year cooling off period, so you can't use the policy for money laundering. But after that, you can borrow value out of the policy.
okay, so year five, I put in half a Bitcoin. Let's just say I want to try to get out zero point 0.2 Bitcoin. Can I do that?
Yeah,
So that zero
yes.
point 0.2, am I paying interest on that zero point 0.2 back to you?
You do pay interest on it, but you'll never uh, like we're essentially paying you a certain amount of interest, and then we're charging a little bit more than that if you take the policy loan. And you can never borrow more than we'll pay out.
Gotcha. Gotcha.
And that way it's like netted again. In some ways, like you're borrowing against your beneficiaries.
Gotcha. And then now let's say we're in year 15. Um, and have I hit my 1.5 Bitcoin now?
No, no, it amortizes till age 100.
Oh,
So
okay. Got it.
it,
Let's just say it's at 1.1 or whatever it is.
yeah, it's 1.1, let's say. Yeah.
Yeah. So,
You could borrow more out of the policy than you put in.
right, right. So, what's my interest rate that I'm like paying back? So if I take out
Um,
a
we have
million
the
bit,
right to change it over time, but like in general, you should think if you really want to know our economics, like we're promising you a guaranteed return. There's a lot of actuarial math here of about like 2%. And then we, in general, try to get 3% returns on the Bitcoin lending. And then that 1% difference is like how we make money. Um,
amazing.
so what we charge for policy loans is we just charge 3%. So it's like our opportunity cost of having invested that money, that Bitcoin that we're giving back to you.
Super helpful. Super helpful. So when did you start taking your first dollars, your first insurance policies?
Q3 2023.
Amazing. And is there anything you want to share to give a sense of scale, growth, traction, any sort of metric you like to talk about?
Um, yeah, we have hundreds of Bitcoin from users, not yet thousands of Bitcoin. And yeah, we're very happy with the growth. And um, look, if I'm like now I can say this, it's a big leap of faith to be like the fifth policyholder or the 15th policyholder. I think we're like over that hump now. Uh, we're still a startup and we're making people like very long-term promises. And there's a lot of like regulatory and legal and governance and compliance infrastructure to like make sure that we are really careful. And by the way, I think that this business is like one of the most powerful ideas in crypto. To actually go back to the whole like thing about alts and long durations, like um, I think crypto is here to stay. And I think that for so much of the world, if you live in, some people think America, but if you live in Argentina or Nigeria or Turkey, like you don't buy life insurance. because you're going to live longer than the Argentinian peso, right? And so these insurance policies, like high net worth individuals, use insurance to actually to wrap LP commitments, to like cover estate tax burdens, like you put them in tried trusts. Like we help people do all this stuff just in Bitcoin. Um, for the type of like long-term store of value and inflation hedge that you talked about. And but that so like we grew something like 50x from 2013 to 2014. Sorry, 2023 to 2024. Not sure we'll 50x this year, but like, I think we'll have another great year. The only way that I think I'm not going to end up with the largest part of my net worth, which is in this company, like being worth a ton of money, is if we aren't careful, either in that we don't manage our liabilities well, which means we underwrite people who aren't healthy. So we're like really careful about underwriting people, really careful about the risks we take on. It's not just enough that you say you're healthy, like we like really double check that. And then the second thing is on the lending side, like we have this balance sheet that is sort of unique in crypto, and that like we can take on duration. We can lend institutional counterparties Bitcoin for a year, not a day, and that's a really powerful idea. But what we sort of get from the market for that is we do a lot of like structure, we get a lot of credit protections, we like really make sure that we are protecting the Bitcoin we have. And the reason we do that is for selfish reasons. But yes, we have more and more users. Um, I'm so grateful for their trust, and then we we keep growing.
Amazing. That's like some pretty crazy growth. Obviously, you started by creating something brand new, so that's amazing.
Yeah.
Um, is there anything else you want to tell our listeners as it relates to Meanwhile and the insurance product and the innovation you've created?
Yeah. The only thing I'll add is just that it's a we've gone over it some here, but people have questions. It's complicated. Literally, you sign up on our website, and me or my colleague reach out to every single person and tend to have a conversation. I'm not. I think we might have like one or two policyholders that did like push through the whole thing, having like listened to me on a podcast or seen me talk. But um, I, I there's a long way of saying people don't have to think that they like have to make this decision. They come to the website and then they just like have to do it. Um, you we like hold everyone's hand because we know these products are complicated, and people tend to be very, for good reason, like careful with their Bitcoin. Yeah.
So you're just so knowledgeable in so many areas. What is it that you like to listen to, watch, or read that you could share with the audience that makes Zach
um
Zach?
that makes Zach. um well, let me answer that two different ways. The the podcast I probably listen to every single episode, which is completely like not a finance podcast per se, is Conversations with Tyler. Just Tyler Cohen has this like super fascinating sort of podcast where he just like interviews people. I think on the alt side, I love your website and the pod and sort of all your work doing on that. And the other one, one of our investors um, runs Alt Goes Mainstream, um, and he has a weekly newsletter, like AGM Weekly. So that's another one on the sort of alt finance side that I really enjoy.
Amazing. So bringing it home here, we're going to put you on the spot. We have something called 3 years out, which is we love to hear from our experts what's a prediction of a public company, right there in the public stock market that you think will be strong 3 years out. And then one private investment. It could be anything across any of the asset classes that will be strong 3 years out. So, Zach, what are your picks for three
Yeah.
years out?
Let me do the private one first, which is I think Bitcoin on some level, and then Bitcoin wrapped in a life insurance policy, obviously, even better. Um, but more particularly on that, I I'm really been looking at like AI application companies. I think that is both like a really cliche thing to say, but I also think like the investor market is like over indexed to these like big model companies.
Can you give
But
me
I think they're
can you give me an example of an application type company?
um oh, they all have like names that sound the same. You know what, I'll just give a different answer because I can remember. I'm really bullish on Rippling. I really like Parker.
Okay,
I think
great.
that's something you could like probably buy on the secondary market.
For sure.
Um, I mentioned the other angel investment, Astranis. I think they're completely under the radar. No one knows who they are, but they build these like small, I mean, big compared to some satellites, but they build geostationary satellites and they provide like telecommunication coverage. And it's just this like some of those hard tech companies are really amazing. On the public side, look, if I was going to invest in anything for 3 years, I guess it'd probably be like it's so boring to say, but like QQQ. I
All
mean,
right. You're allowed to say
it's
it.
yeah. That's where my head goes. I have a little exposure to the triple QQQ, but you know you can get into weird. Sometimes that like outperforms, sometimes it underperforms. So I don't want to.
Perfect. Well, we've had an amazing conversation here. It all started with, the becoming a Stripe employee number 36, 37 for 3 months. Obviously, you had your time as being CTO, the city of Newark with Cory Booker, which is amazing. You had your first startup, Standard Treasury, sold that to SVB. Maybe could have gone somewhere else, but SVB was a good result. And then you have had so many successes along the way, both as a public servant and doing the entrepreneurial thing. You give some really innovative ideas, whether it's like collaborating with the website Composer or the way you work on DeFi, which is a little bit simpler with his exponential.fi, which sounds amazing. You did give us a prediction on BTC, which I love, about 200K around 2030, but not trying to predict tomorrow. But you did say you think it could get to the price of the equivalent of gold, which is plus minus, let's call it 700K. Your company sounds amazing, based in Bermuda, being super innovative. Meanwhile, able to put a life insurance wrapper all underwritten in Bitcoin. You gave us the four major benefits, which is the hedge against the inflation, tax-free growth, able to do the interest-free loans, and also just managing the BTC for you, so the person doesn't have to think about the keys and losing all of that themselves. There is a one Bitcoin minimum, but other than that, just be healthy and be able to be, AML KYC. Already have hundreds of Bitcoin that you're working with across all your customers. You gave us some podcast suggestions, and of course, 3 years out, you mentioned BTC, wrapped is best with Rippling, and then also Astranos. And with Public, you went a little safe, but that's okay because you're quite innovative with QQ. Zac, thank you
Yeah,
very much.
thank you.
Smart Humans with Slava Rubin is a podcast brought to you by the team at Vincent. Any data, text, or other content in this podcast is provided as general market information and not as investment advice. Past performance is not necessarily an indicator of future results. For more information on alternative investing, check out Vincent at www.withvincent.com.